The title suggests many things. The important issue is the world revolves around business, society, organizations, individuals, and even religion survives and thrives because of business. Business has to encompass not just financial commodity and service transactions. It has also to include welfare, justice, empowerment, environmental, and other issues too. Every week, Business Matters will delve into aspects of business that impact our lives. We will seek out extraordinary and ordinary people who have done extraordinary things. Facilitators, educators, and entrepreneurs will be invited to inspire and enlighten our listeners. Join Anwar Mullah for an interactive show and find out what really matters in business.
Assalamu alaikum wa rahmatullahi wa barakatuh. You tuned into Minara Business Matters here on Radio Al Ansaar. I'm stepping in for my colleague today. My name is Essa Hassim. I'm one of the directors on the Minara Chamber of Commerce, and I'd like to welcome you tonight to this program, being Monday, the 27th of Jan, 2025. So today we have a guest with us to enlighten us a lot about the macroeconomic conditions here in South Africa. So before we go ahead and interview the guest, I'm just going to give you a background. So his name is Johann Els. So he is the Group Chief Economist at Old Mutual, and he has a BCom honors and a master's in commerce. So just some background about Johann Els. So after graduating at the University of Stellenbosch, where he studied courtesy of a South African Reserve Bank bursary, Johann joined the South African Reserve Bank's economics department. So following a period as an economics lecturer at the University of Stellenbosch, he joined the Trust Bank, which is one of the constituent banks of today's Absa Bank. As an economist, Johann, he joined Old Mutual Investment Group as an economist in 1991, and since 2017, he has served as head of the economical research and chief economist of the Old Mutual Investment Group. Johann was appointed as Group Chief Economist of Old Mutual in 2023. And Johann is responsible for all areas of macroeconomic research. So this includes analysis of the global economy, specifically those economies that impact most on South Africa. So namely the USA, Europe, and China. He is also tasked with detailed research of all South African economic variables. Specific focus areas include the rand, inflation, interest rates, and fiscal matters. I'm sure a lot of those in business and in the corporate world can relate to this. As Group Chief Economist, Johann provides economical input into not only the broader Old Mutual Group functions, but also the investment process of the various investment boutiques within the Old Mutual investment groups. I think without further delay, let us have a chat with Johann. Johann, how are you?
Hi, good evening. I'm fantastic. Looking forward to chat tonight.
Excellent, fantastic. Firstly, it's a pleasure to have you on board, and it's wonderful to have you here and to gain your insight into where South Africa is going this year. So, Johann, just to let's get things going. Is there anything else that I should add on your list of accolades that I spoke about and shared with our listeners?
No, we spent too much time on that already. Thanks so much. You've been too kind.
I think we'll probably have to write a book about it later. So I think let's just start off, and we just want to get a feel as to what is your forecast for South Africa's economic growth in 2025, and what sectors do you anticipate driving this growth?
Yeah, firstly, let's step a little bit back, if you don't mind, towards 2024. 2024. We haven't got final growth numbers yet, but it looks like it'll be pretty weak. 2023 was 0.6% economic growth, and 2024 looks like it'll be something similar. We expected more because of the lack of load shedding from around late March last year, but then in the third quarter of last year, we had significantly negative agricultural production, and that pulled GDP growth in the third quarter into negative territory. Now, we haven't got fourth quarter numbers yet, so that's the reason why we haven't got final numbers for the year yet. So fourth quarter could be slightly more positive, consumers were looking a little bit better, given that, the two-pot money helped. Inflation started coming down. We had interest rate cuts, etc. But overall, last year was still dismal growth. That lack of load shedding during the course of last year is continuing into this year. We're also making inroads into the other big logistical constraint, Transnet, in terms of their export volumes. That is busy picking up. So all the structural issues in the economy, we're starting to sort out a little bit. It's a long way from being done, but we're heading in the right direction. Plus then, so the structural stuff we're busy fixing, and then the cyclical stuff, that's the shorter term cycle. Lower inflation, lower interest rates, some job growth, and of course, significant improvement in confidence. You and I and the listeners out there, whether we're consumers or business people, we're all feeling a little bit better about the economy after the formation of the Government of National Unity. So all of that will start to help economic growth this year. And that's why from a very dismal 2023 and 2024, around 0.6% economic growth, I think this year we can have growth just above 2%. And again, we can come back to that. It's not enough if we continue around 2%. That's not enough. But the pickup from 2024 into 2025 will certainly help. And that pickup will further drive confidence up. So this year should be a better year for all of us. Inflation continuing low, more interest rate cuts, including this week. So all of us are feeling a little bit better about the economy, about ourselves, about our own financial positions, etc. So things are busy picking up a little bit.
Oh, that's actually positive, and that's actually good to really hear. And I think a lot of people will, gain a lot of positivity out of that, out of all the negative factors we keep on hearing all over the years, all over the months. I think that's a good thing for everybody to hear. And thank you for that. Just for our listeners, towards the end part of the program, if there is time, we would be taking some of your questions, which we can perhaps ask Johann. So you guys can send your questions to the WhatsApp line, which is 060-904-1056. Just to repeat that again, it's 060-904-1056. Johann, tell me, how are global economical trends, such as shifts in the energy markets or geopolitical tensions, expected to impact us, here in South Africa? So how to impact our economy in this coming year?
Yeah, that's always a good question, because South Africa is a very small and very open economy. So what happens in the rest of the world impacts significantly on us. European events are important, but what happens in the USA is hugely important. And we can talk about potential new Trump policies in the USA that will impact on us, but also China as a big trading partner is hugely important. But what you're asking is the geopolitical stuff, stuff that influences the oil price, for instance, Middle East conflict, etc. That is very difficult to forecast. And rightly, our central bank, therefore, is always hugely concerned about these risks. Risks we cannot forecast. We can keep an open mind. We can follow these trends. We can watch out for them. But we cannot say for sure what will happen. And therefore, there's lots of uncertainty around always, especially from the oil price. And if the rand, that's a very volatile currency, the rand combined with the oil price, that immediately impacts petrol prices in South Africa. That's got a direct link into inflation and transport costs and other consumer goods costs. So the Reserve Bank, when they set interest rates, are always concerned about these external risks that could influence inflation patterns in South Africa. But it can also impact on economic growth. If China is growing much slower than what they otherwise would have, let's say this year because of trade tariffs from the US impacting Chinese economy, then our economy will be impacted by this. Or if the US under a Trump presidency should decide to throw us out of AGOA, the trade agreement. That would have a huge impact on us. So the South African economy, again, as a very small and very open economy, very dependent on what happens in the rest of the world. And that can potentially play havoc with our own economy. I think what we should highlight, though, this time around, compared to at least the previous Trump presidency in early 2017, the SA economy is actually looking a lot better than back then in terms of growth prospects, in terms of the structural issues in the economy, in terms of the cyclical issues in the economy. So we've come a long way since early 2017 to now in terms of being able to withstand some of those risks. It's not as if we will be able to totally not be impacted, but we will be slightly more insulated against some of those events.
Tell me something. There has been a scale back in the local petroleum production, with a lot of companies sort of resorting to shutting down and whatnot. There were some big refineries here in Durban specifically. Has that impacted? Does that have a macroeconomic impact also on us as South Africa?
Yes, absolutely. So now we're importing refined products. In other words, oil. No longer importing oil to be refined here. We're now importing petrol directly, or aviation fuel, etc. So those are more expensive products. So in terms of the impact on the trade balance, now we're running perhaps a bigger deficit on the trade account than we otherwise would have. And that eventually has an impact on the rand exchange rate, and through the weaker rand than what it perhaps would have been otherwise, that has an impact on inflation. So that has an impact on confidence levels, and that has an impact on interest rates as well. So there's a whole flow of events that takes place in these a whole set of economic indicators that impacts on South Africa.
Perfect. So from your view, right, what are the key economic policies or reforms that the South African government should then prioritize to improve this growth and perhaps address unemployment, which we know is a major factor here in South Africa?
If I can start with unemployment, the most important way, the biggest single way we can impact on employment is having stronger, sustained economic growth. Instead of the 1% annual average growth that we've had over the last decade, we should have around 4 or 5% economic growth on a sustained basis. In other words, year after year after year after year. That's the way we make an impact on the unemployment rate, because through stronger economic growth, we create more employment opportunities. But the second part is that we should also deregulate the labor market more. The labor market in South Africa is very regulated. And of course, the unions will shoot me for this, but that's true. If a deregulated labor market combined with stronger sustained economic growth, you get stronger employment growth than under, let's say, we get the stronger economic growth, but under a regulated labor market, employers, businesses are not as willing to employ more people. When the perception, and I'm not saying this is true, I'm saying that's the perception amongst investors, is that South African labor is militant, expensive, or uneducated, or perhaps not educated enough or not skilled enough. If that's the perception, then private businesses won't employ as many people as they otherwise would. Now, in the US, for instance, very deregulated labor market, yes, in a crisis like the COVID crisis that led to a deep recession, millions of people lose their jobs. But when the economy starts to recover, many millions more get their jobs back and more people get employed. In a regulated labor market like South Africa, yes, we lose the job opportunities during a crisis or recession like in COVID or the global financial crisis. But when the recovery comes, not everybody gets hired back. And we see that in our employment numbers. So a deregulated labor market on top of more sustained economic growth will certainly help employment more. But in terms of the first part of your question, what policies? And I think there we've come some way. If you cast your mind back towards the unrest in KZN mostly and in Gauteng during July 2021, there was a perception that government would shift economic policy to the left, become more socialist, spend more money to pacify the population, to get rid of the unrest. Instead, they went the other way, the correct way, in my opinion. They shifted economic policy to the right in terms of a more free market type economic policy for South Africa. That simply means instead of trying to do their own thing, they went towards the private sector and say, we need your help. The private sector involvement in the issues where we had structural problems like electricity, and now in water supply, electricity grid, logistics where Transnet is suffering, etc. Bigger role for the private sector, significantly bigger role for the private sector. That's what's going to drive economic growth upwards towards that more sustained, stronger growth that we need. So that policy change, and I don't think government got enough credit for that. But now, after the formation of the Government of National Unity, now people start to believe that, hang on, this is happening. We've had no load shedding since late March last year. To a large part, that's private sector involvement, including you and me and listeners who put their own solar panels on their roofs. That's private sector. So all of those processes where we sort out the failures of government or state-owned enterprises. So we're not there yet, but we're moving in the right direction.
Johann, I'm just going to jump in there. We're just going to jump into a quick ad break, and then we're going to come back.
Great.
Al Ansaar International.
Radio Al Ansaar, Durban 90.4 FM. Pietermaritzburg 105.6 FM.
Welcome to Simplex Radio. Visit our showroom for the full range of car audio. Our TV department carries top brands with quality LED panels, full HD to Ultra HD, and now the experience of Super Ultra HD. Visit our theater rooms and transform your home with brands like Onkyo, Integra, Denon, Boston Acoustics, Yamaha, and more for quality audio visual experience. Now available, full range of home appliances. A one-stop shopping experience. Call 031 306 4029 or Kenilworth Park, 202 Brickfield Road, Overport. Simplex Radio, the name you can trust. This segment is brought to you by Kenfield Auto, your RMI approved service and repair specialist. 236 Brickfield Road, Overport. Kenfield Auto.
Bismillahirrahmanirrahim. ربنا إنك تعلم ما نخفي وما نعلن وما يخفى على الله من شيء في الأرض ولا في السماء.
Car won't start?
Kenfield Auto.
Noisy brakes?
Kenfield Auto.
Due for a service?
Kenfield Auto. Kenfield Auto. The answer to all your car problems. Your service and repair specialist for your VW, Audi, Suzuki, Toyota, or just about any vehicle. Kenfield Auto, your RMI and insurance approved workshop to handle them all. 236 Brickfield Road, Overport. Call us on 031 207 2399. Kenfield Auto.
اللهم بارك لنا في رجب وشعبان وبلغنا رمضان.
The chaos and destruction in the Gaza Strip is beyond comprehension. Virtually everyone is displaced, hungry, and in urgent need of life-saving humanitarian support. The Al Imdad Foundation has been working tirelessly to address the health, nutrition, and water needs of the population. Our hospital, water deliveries, and hot meal programs are made possible with your support. Your donation, big or small, is a lifeline for those in dire need. Help Gaza survive. Donate online at alimdad.com or call 0861 786 243 for more information.
Today Jamshed brings you summer clearance sale with up to 50% off on all items. Avail the most exciting offer from 23rd January to 2nd February 2025. Visit our store or shop online at ca.todaymjamshed.com.
Business Matters. The title suggests many things. The important issue is the world revolves around business.
Assalamu alaikum wa rahmatullahi wa barakatuh. You're back with me, Essa Hassim, presenting here tonight on Minara Business Matters here on Radio Al Ansaar. Our topic for today is on the economic insights for South Africa for 2025, and we're joined by our esteemed guest, Johann Els, who is the Group Chief Economist of Old Mutual. Welcome back, Johann.
Thank you very much.
So just continuing from before, given the significant role, perhaps, that small to medium enterprises play in job creation here in South Africa. So what sort of support measures or opportunities you feel are crucial for their success in 2025? Because you would have a lot of SMMEs watching this segment and trying to gather what can we do differently or what can we do better here in South Africa for 2025, and what can we expect to do?
Well, in terms of the macroeconomic environment, 2025 will be one of the best years of the last decade in terms of lower inflation that allows consumers significantly extra money in their pockets, continued job growth in the economy. We talked about employment growth earlier on, but even in this very weak economic growth over the last 2 years, and when we say very weak, below 1% economic growth over the last 2 years, this economy created 2.2 million new jobs. So that's extra jobs, that's multiplied by income, that's money being spent out there in the economy. Lower inflation, as I said, helps. Lower interest rates is certainly helping, but a huge part of an improving economy is this improvement in confidence. Consumer confidence has picked up dramatically, especially the part where consumers feel that their own household finances are indeed looking better. And then business confidence picking up, less political risk after the Government of National Unity's formation. So that all means that this year should be significantly better. As we said earlier, maybe above 2% economic growth this year. But really, if we talk about sectors, consumers are going to be doing a lot better. When I say consumers, of course, everybody involved in consumers, whether that's retail trade or consumer services, etc. Consumers should be doing a lot better. But in terms of the overall economy, with this drive of significantly stronger private sector involvement in the economy, there's going to be lots of the areas of investment, whether it's investments in harbors or railways or roads and bridges and airports, etc., mostly in electricity and the electricity grid. So lots of investment sectors are going to be doing a whole lot better. So I focused on those specifically because if the economy is doing better, if confidence is doing better, if people are spending more, if businesses are spending more, then all of the SMMEs will be doing better. It's a great environment for them. So for SMMEs themselves to just focus on absolutely always, it's not just this year, cut costs. Because in an environment, whether you're suffering, it's a hard environment or better environment, if your costs are kept down as much as possible, your profit line will pick up dramatically. So always focus on cutting costs as much as possible. But in this better overall macroeconomic environment, everybody should be doing better. But then those profits that you make, invest that back into your business. Because over the medium term, the economy is going to be performing better on a sustained basis than what we've seen over the last decade. So if you invest back in your business, that's the way to build on that profit growth.
I think an interesting question which comes about, talking about unemployment, right? Perhaps you have examined the effect of the implementation of the national minimum wage here in South Africa. From your statistics, has it actually reduced the unemployment rate, or has it actually made it worse due to the fact that the private sector find it difficult to pick up to the national minimum wage, especially SMMEs?
Yeah, that's a very difficult one because we haven't got any clear evidence. Intuitively, I would say that having a minimum wage was part of that regulated labor market that I talked about earlier that has kept a lid on stronger employment growth. In a truly free market economy, you don't want a minimum wage. But then, of course, that's unlikely to have in any economy these days. Even in the US, that's supposedly a free market economy, they've got a minimum wage. So I strongly believe that not having a minimum wage would have resulted in a stronger employment growth rate. But it's one of those things that having a minimum wage, it's the same type of argument as social grants. We said we couldn't really afford social grants or the COVID grant, but eventually that has helped significantly in reducing poverty, or the lowest level, the absolute poverty in South Africa, significantly. And a lot of the money that government, for instance, spent on social grants or COVID grant flows back into the economy through some of the activity in the economy, but also through indirect taxes, whether it's the fuel levy, people take taxi transport, or through VAT, people buy something somewhere in the formal economy. So a lot of those monies, whether it's the minimum wage or whether it's social grants, etc., it flows back into the economy. So those aren't wastes. But again, to come back to my initial answer, I think if we didn't have a minimum wage, employment growth might have been stronger. But of course, again, the biggest issue is economic growth. If you want to fix unemployment, fix economic growth.
Perfect. Thank you so much for that. So on the concept of employment, right? So with youth unemployment, so that apparently that's remaining at it's a very pressing issue here in South Africa. So how can South Africa better leverage innovation and technology to create a more sustainable opportunities for the young people of our country?
It's a difficult one because it hangs onto the education sector. We've got a huge skills deficit in South Africa. I think we failed the youth through the education system in South Africa. We haven't, in this new South Africa, we haven't been able to fix education over the past 30 years. It takes a long time to fix education. If we start today in all earnest and we do the right policies, it's going to take 20, 30, 40 years to fix education, to fix the skills deficit. That's what we need to do in order to fix youth unemployment. Whether we'll be able to do that in your or my lifetime, I think it's not clear. I think we've got a long way to go. So the only thing that we can do under current circumstances, we try to fix the education system, but at the same time, we try to fix the economy, because a lot of people eventually get some kind of income through the informal sector as well. We haven't been able to fully and clearly measure the informal sector's role in the economy in terms of GDP contribution. But this is the difficult part, because some people actually make some living in the informal sector, whether it's a decent living or not, whether it's enough or not, that's another question, but at least some kind of living. And in South Africa's case, lots of economists focus on getting employment going through the manufacturing sectors. I think that's the old economy. The new economy, we've got so much going for us in terms of building the tourism sector. And lots of these young people are absolutely fantastic in terms of the ability to service tourism. People coming into restaurants and hotels and touring the country. That's a huge part of this economy that can be built out significantly, where you don't need significant a university or technicon skills. You can easily train people to be waiters or workers in hotels or guides for tourists, etc. So that's a huge opportunity. So we need to build the economy. We need to build on making it easier for tourists to visit South Africa and to make it cheap enough for them to come here. The rand exchange rate helps with that. It's a tourism destination that people want to come to. But, sometimes we price ourselves out of the market in terms of too expensive restaurants or too expensive hotels. We should be cognizant of the fact that tourists want to bargain. The rand helps. We shouldn't take that away through pricing.
I think very true indeed. I think there's some good pointers for the tourism industry to take in, and perhaps to relook at the strategy of how we market our country. Just a very interesting question which came about as well was BRICS, right? So a lot of the BRICS nations are choosing, slowly, they're choosing to trade in their own currencies. So that apparently will have an impact on the strength of the US dollar. So how do you see that impacting our South African rand, and also do you see our currency strengthening with that sort of shift in global trade?
Okay, so there's a couple of very important issues there. President Trump also warned recently, for instance, if there's a BRICS currency, that he will raise tariffs against exports from the BRICS currency that goes to the US. That's negative. The likelihood of a BRICS currency is minuscule, in my opinion. If you think about it, the Euro area, they for many decades worked towards the right policies, worked towards a central bank with a single monetary policy, single inflation target, before they could manage to start a euro currency. That euro currency hasn't taken over the US dollar, even though it's a pretty decent currency. My point here is that for one single currency, you need one single monetary policy. And if I think about the diverse BRICS currencies, it's, in my opinion, hugely unlikely that people in China will be willing to accept interest rates being set in South Africa, or South Africans being willing to accept interest rates being set in Brazil, or Indians being willing to accept interest rates being set in Russia. So it's a long way off before we have a single inflation target or single central bank or single monetary policy, and thus the likelihood of single currency minuscule, in my opinion. And trading in our own currencies, the individual currencies of the BRICS countries, they're far too small to impact on the dollar. So I don't think this is any big issue going forward. If we talk about the rand specifically, now before Donald Trump, and this is apart from BRICS, etc., just the rand exchange rate, if we think about the likelihood of the rand strengthening before Donald Trump was elected as US president in November last year, there was a strong likelihood that the rand could strengthen significantly. And that was based on, firstly, the fact that the dollar was expected to weaken in line with US interest rate cuts. But now, after Trump won the election, the potential policies that he will institute, there's lots of uncertainty around that, but instituting trade tariffs against his trading partners, that will raise inflation in the USA because of higher consumer goods prices. That means the Fed will stop cutting rates. That means the Fed will likely start to raise interest rates. That means the dollar will strengthen. And that's what we've seen in anticipation in the market since Trump won the elections. The rand is still hugely undervalued. In other words, it's much weaker than what it's supposed to be. And the fact is that there's lots of uncertainty around Trump's tariff policies. His first week in office, he didn't institute any new trade tariffs. There were lots of warnings, there were lots of threats, there were lots of promises, even against Colombia over the weekend, but nothing happened. And I think that's going to be key, this uncertainty. So it's not clear-cut that there will be tariffs or that there will be significant tariffs. So I think the dollar has strengthened significantly, but it's perhaps overdone. And over the last week, since the market saw that Trump hasn't instituted new tariff policies, the dollar has actually weakened a little bit. And that combination that can perhaps continue, I think there's still an opportunity for the rand to strengthen against the US dollar over the next year or so. And if we talk about local SA issues like less political risk, better economic growth, that means less risk around the budget, less risk around the debt ratio, and perhaps that we get back to investment-grade credit ratings soon. So I think there's a probability that the rand can continue to strengthen. Perhaps not as much as before Trump won the election. So if the Democratic candidate won, perhaps the rand could have strengthened more. But I think there's still room that the rand can strengthen a little bit.
Yeah, perfect. Thanks for sharing that, Johann. And we see that you provide input for the investment process of the various investment boutiques in Old Mutual. So is there any is South Africa currently on the global and macroeconomical scale, is that still a hub for better investment return? Because just looking at it, we find sometimes that the return of investment that an international investor can get through South Africa sometimes is higher than the rate of investment that they would get should they invest in other countries of the world, the likes of Dubai and whatnot. So would you say that that actually makes us as South Africa stand out in comparison to the other countries and investment returns?
Yeah, I do, especially because the magnitude of change in South Africa is far bigger than anywhere else. We've been in dismal growth situation for a decade. The change is significant in terms of expecting now an uplift from 1% annual average economic growth to around 2.5% to 3%. That's 3 times what we had economic growth. Significant benefits for the private sector in terms of investing in the economy and participating in the economy. So in an overall environment where, yes, offshore investments have done well, far better than SA investments over the last decade or so. When we look forward, I strongly believe that emerging market investments will be doing better than developed market investments. And within emerging markets, the change in South Africa is so significant that South Africa will be doing far better in investment returns over the next 5 to 7 to 10 years plus. In other words, medium to long term. It's not immediate, but then we invest for the medium to longer term. And therefore, we start to look at that now. And it's that change in weak economic growth to stronger economic growth, the significant change in the confidence levels that will drive that change from being in sub-investment grade in terms of credit ratings to investment grade in credit ratings. So that uplift will drive economic growth, will drive investment returns. So absolutely, I strongly believe that South Africa is now in the position where a typical US investor has always been. A US investor has the bulk of his investments in the US, not offshore. We're heading in that direction where I think that over the medium to longer term, South Africans should have the bulk of their investments in South Africa, not offshore. And that's contrary to what many other investment advisors advise, that you should have all your money or the bulk of your money offshore. I strongly believe this is a change in that absolutely you will have to be diversified. You will have money offshore, and each of us as individuals will have a different risk profile. So you might have view that you will have more offshore than I will, but I think all of us should look into that the potential investment returns in South Africa has picked up dramatically, and that we should seriously consider have the bulk of your investments in South Africa and not offshore. And from that, not only the investment returns, but also the likelihood that the rand can strengthen and that the rand will likely be more stable in the medium to longer term.
Perfect. Thank you so much for that advice, Johann. I think a lot of our listeners will appreciate that. And I think what it is doing, it's putting South Africa first, basically. And I think what you've shared with us today really gave a lot of us positivity, gave us some sort of insight. And we really appreciate your time coming here on this program. Is there any closing remarks you'd like to make? Any parting words for our listeners?
Just briefly, I think inflation is very low. I trust South Africa's inflation numbers are absolutely solid. And remember that each of us will have an individual inflation rate. So the average of 63 million people is absolutely accurate. And because inflation is so low, I think the Reserve Bank will cut rates this week, and they will perhaps cut again in March and in May. So it's an environment where we're moving into a more positive territory, and we should take advantage of that. This is a huge uplift from the last few years. And I think the political environment has also improved significantly. So even if you don't believe everything I said, we all think that we're heading in a right direction in terms of a better economic growth path, a better political path for South Africa. Things are improving.
Perfect. Thank you so much, Johann. We really appreciate your time. Please do come again. And it was wonderful having you on the program.
Thank you very much.
Thanks. Cheers. And with that, our listeners, I'd like to thank you for joining in. And it was wonderful to have you listening in onto the program here on Business Matters, here with the Minara Chamber of Commerce, here on the Radio Al Ansaar. I bid you farewell with the words of peace. Assalamu alaikum wa rahmatullahi wa barakatuh.
The Al Ansaar Foundation, Da'wah, Tarbiyah